Hi everyone, and welcome back to another portfolio update. This update, I'm sitting at $176,686. I received $576 in distributions this month, receiving the last two from VIU and VEE just today inside of Wealthsimple. Go to my activity here. Yeah, just a bunch of these, and those dividends will be reinvested on Tuesday because Monday is a holiday here in Canada, and that will be reflected in the difference here because there's just there's a bit of a little gap here. But that they won't be reinvested till July, so I figured I'd just record the video now anyways. So yeah, the market has been performing pretty well. A little bit of just like stagnant action over the last couple months, I would say. The big thing that was interesting to me was the Canada CPI. We saw the Bank of Canada reduce the interest rate by 25 basis points, and now we're seeing an uptick inside of inflation for May. And it's interesting because like they were predicting it to go down even more from April to 2.6%. So it was 0.3% above expectations. So did they cut preemptively? I think so, maybe. Um, yeah, like I think they should have held rates a little bit longer. But usually when they cut rates, the respective markets start to rise a bit more. So yeah, we'll see. Like I still think there's a lot of value in the Canadian economy right now because everything's so like ridiculously undervalued compared to the US market. So I think if you're it'd probably be a decent time to buy some like Canadian ETFs or stocks, whatever you hold inside of your portfolio. And for me, that's VDY. So I think that's still a really good buy right now. In terms of the VFV is just making new highs. It's pretty crazy. It's sitting at 132.46, which is um, quite high. And part of that, and this kind of like leads into the CPI, Canada CPI ticking up. So you can see since the beginning of 2024, the Canadian dollar has continued to underperform the US, like underperform relative to the US dollar, losing about 3.6, between 3 and 4% of its value since the beginning of 2024. So what that means for the Canadian economy is our imports become more expensive because we need more Canadian dollars in order to buy US products and bring them in. So you're seeing the US right now, their inflation rate is cooling. I mean, they had a big uptick since the beginning of the year, and then now it's coming down again. So from Canada's perspective, I think this number is going to go up more. Like I think the Canadian dollars is only adding fuel to the fire, like poor foreign exchange relative to the US, with the US being our biggest trading partner. So yeah, the Canadian inflation rate is, I think it's going to stay high. I think it was a mistake by the Bank of Canada to cut rates so prematurely. I think they should have waited a bit longer. So, but as investors, we can capitalize on the opportunity. I still think, yeah, Canada's undervalued, but at the same time, what the Canadian dollar weakening relative to the U.S. dollar, that is going to increase the price of VFE. So just keep that in mind. So VFE on top of the S&P 500, just like in tech overall, just really just booming so far in 2024. The US dollar has also been gaining ground against the Canadian dollar, and with an unhedged like ETF like VFE, and obviously VOO because it's held in US dollars, you're gonna see outperformance in that perspective as well. Um, so yeah, like the only way the Canadian dollar could start to outperforms if we increased our interest rate, because obviously if our interest rate increases relative to the US interest rate, our people can get a better rate of return with a simple like cash ETF if they buy in Canada. So a demand for our dollar starts to increase. So it's kind of a bit of a battle between Canada and the US right now, I think, in terms of like foreign exchange, and a lot of companies in Canada are feeling it. So yeah, I think it might be still a good time to pick up Canadian stocks at value. VFE, I think maybe a bit of a pullback might be warranted here. So, obviously don't try to time the market, just keep doing your recurring buys. But, if you see opportunity, like I see a bit more opportunity. Like if you want to like, what I do sometimes is I have my recurring buy and then I leave a little bit for opportunity. Like I leave like, like, okay, I'm investing $500 each paycheck. I'm going to say 400 is like buy no matter what. But then I have like $100. I'll just say, okay, what's kind of like undervalued versus overvalued. So right now, I think the U.S. is starting to get a bit overvalued, in my opinion. But um, you know, you can make that judgment for yourself. I mean, obviously, I'm sitting in a really nice gain with it, so I'm not planning on selling. I'm just saying that there might be better opportunities elsewhere right now. I think, like obviously, like even BE hasn't recovered since the 2022 crash, so still a lot of value there. So, buy your stocks, or in this case, ETFs. Like you buy your groceries when they're on sale, you buy, um, you know, not, yeah. So that's great. As for I've maxed my TFSA, so I'm kind of done basically with not done, but like I'm going to be focusing more on the covered call ETFs for income in my non-registered account for the remaining of the year. So ESPX and ETSX will sort of be a focus, just because I'm trying to increase the monthly income from that non-registered account. So yeah, I'll be making those buys shortly into July here. So yeah, that's about it for this update. Oh, I guess maybe the dividend income. Yeah, I mentioned it. Okay, 596. I'm expecting about like $600 for dividend income because yeah, the quarterly payers VIU and VE already paid in June. So kind of like this graph is when it's in the blue, it's like uh, looking into the future. So that this I'm kind of assuming that they pay on the like in July, but they paid a bit earlier, so it'll be about $600. So this graph is a little bit too high, but yeah, I'm expecting about 600 in dividends next month, so that should be pretty good. But yeah, that's about everything for this update. And I'll see you guys in the next one. Thank you.